There are many things you need to understand about forex trading. Forex trading is a business that can give you financial freedom, financial independence if you know how to invest your money very well. So many traders are making so much money from the forex market. Why so many traders are losing money every day in the forex market? That is why out of 100%, only 1 to 2% forex traders are actually making money in the forex market, while the rest are losing money consistently. But ladies and gentlemen, my main aim in this channel is to add you among the 1 and 2% forex traders that are actually making money in the forex market with realistic facts. So my name still remains Austin Ikeru, and you all are welcome to my channel, Ostino FS. My advice to you guys is to watch this video from the beginning to the end, because in this video I'm going to be revealing to you the best way that you can be making $1,000 every day trading the forex market. $1,000 is a whole lot of money, and if you can be able to make this type of money every day, you can be able to take care of every financial need that you have. So that is why I'm encouraging you all to watch this video from the beginning to the end. Now, if you truly want to make $1,000 every day trading the forex market, then you need to have some rules and regulation that you must abide to. And when I'm talking about forex, I'm not just talking about the forex market. I'm also referring to crypto market. I'm also referring to binary options, stocks, commodities, anything trading, right? So whenever I call forex, just know that I'm referring to all the financial market that you can trade. And the best strategy that you can use to trade the forex market is price action coupled with trend following. This is one of the basic strategy that I've been using in the forex market. I don't want any complication. I don't want anything that will make me to be confused. That is why I always use the simple formula in my trading strategy. I've given you some of the strategies that I use to trade the forex market. So it is now left for you guys to go and backtest that strategy. Now, if you want to make $1,000 every day, then you need to have capital, because in the forex market you use money to make money. Forget about those traders that always deceive you that they are flipping account, that they are using $5 to make $1,000 and so on and so forth. Don't believe all those craps. I'm just telling you this realistically, because forex trading have sat me down and taught me a lesson. That is why I don't want you guys to go through what I went through before I could be able to master the forex market. Because one thing is for sure, either you learn it in an easy way or you learn it in a hard way. So my advice for you guys is to learn it in an easy way so that you don't have anything to lose. And that is why this channel is there to guide you so that you don't make mistake that so many forex traders are making. So if you want to make $1,000 every day in the forex market, you need to have at least $100,000 in your trading account. That is the realistic fact. If you truly want to make $1,000 every day trading the forex market, you sincerely need to have at least $100,000 in your trading account, or you can at least have $50,000 in your trading account. Remember that I always encourage you not to risk more than 1 or 2% of your entire capital. So if you have $100,000 in your trading account, the 1% of $100,000 is $1,000, right? So you can use $1,000 to trade the forex market. Then you can use 1-to-1 risk reward, or you can use 1-to-2, 1-to-3 risk reward ratio. Bear in mind that 1-to-1 risk reward ratio means that you invest $1,000 to make $1,000, while 1-to-2 risk reward ratio means you invest $1,000 to make $2,000, and so on and so forth. So that is why you have to understand money management before you trade. Very important. And if you want to make use of 2%, that means with a $50,000 capital, you can still use $1,000 to trade, which means it will take you 50 times for you to lose that account. While with a 1% trading strategy, it will take you 100 times to lose your account. So just imagine it is impossible for you to lose 100 times unless you don't know what you're doing, right? So what I want to let you know is that emotions is very, very important in the forex market. Emotions. So if you truly know how to control your emotions very well, you'll be able to make so much money from the forex market. But if you don't know how to control your emotion, you'll be losing money back to back. Now, if you risk too much money, your emotion will increase because you'll be scared of losing that money, and these things will make you to be taking rubbish decision. You just be trading without adhering to your rules, right? And that will lead to revenge trading. Let's say, for instance, you risk $1,000, and when you lose it, you will now increase your risk again to maybe $2,000 or $3,000, so that when you win, you will recover your losses. That is not how it works, because if you continue that way, you keep losing, right? And before you know it, you blow off your account. So that is why it's very encouraging that you understand what you are risking and you understand what you are trying to gain. And then you understand if you want to last in the forex market or if you want to quit, because some people have come and go while some are still in the game. The reason why some people are out of the game is because they don't have any other money to trade, because with that money you cannot trade. You trade using money. So if you don't have money, you can't trade. That is the fact. So why not manage the little money that you have and use it to make more money? You scale up that money. There's what we call compounding in forex trading. You compound your income and they keep growing, right? Now with the $100,000 in your capital, you can risk just 1%, which is $1,000, and then you compound your income. If your money grow up to $200,000, then you can now increase your risk to $2,000, right? Still 1%, because 1% of $200,000 is $2,000. But the fact that you have made more money and your money has increased from $100,000 to $200,000, you cannot increase your risk from $1,000 to $2,000, but you are still maintaining the 1% rule. So these are the things you need to understand, right? Now let me just talk to those that are just starting, because I know most of you don't have up to $100,000 in your trading account. Let's use $10,000 for instance. Let's say you have $10,000 in your trading account. You have to risk 1% of that $10,000. And what is the 1%? The 1% is $100, right? So if you have $10,000, you should be looking to risk only $100 in your trading account, right? But if you have 1-to-2 risk reward, you can risk $100 to make $200. So with this strategy, it will take you so much time, like 100 times for you to lose your account. Don't trade like other traders. Trade using your own concept, right? I'm just teaching you this strategy so that you will last. So many people have blown their account uncountable number of times. The reason is because of lack of money management. Like lack of money management, and this is why so many people are quitting forex trading. Fine, the business is risky. You know it's risky. What you have to do is to calculate your risk, right? Calculate your risk, right? Know what you can afford to lose. Don't just come into the market and throw your money. Risk what you are that you know you can risk. So if you have $100,000 in your trading account, then I guarantee you can be making $1,000 every day with 1-to-1 risk reward. And if you have $50,000 in your trading account, you can still make $1,000 every day, right? Because you are risking just 2% of your entire capital. That is all I always preach. Risk either 1 or 2% so that you last long, right? Because sometimes you may have some streaks of losing, right? But when you have up to 5 or 6 losses, you cannot, that will not affect your account balance. You may just close for the day and start the next day. But imagine if you are over risking your money, like you have $10,000 and you are risking $1,000. Just have it in the back of your mind that just only 10 losses, that account is gone. Or you have $5,000 in your trading account and you are risking $1,000. Have it in the back of your mind, just 5 losses and that account is blown off, and you will not have any other money to trade. So just imagine the pains that you are watching the chart and the market is trending and you don't have any money to place any trade, and you are looking at the chart, the market is trending, either going up consistently, the market is going up, and you just be thinking, hi, had it been I have money, I will just buy a trade and I will be able to ride this trend. But there's no money in your trading account. You just be looking at the market while others are making money. The reason is because the money you had, you mismanaged it, and that is why you lost everything, and now you don't have any other money to trade. So that is why it's very encouraging that you understand money management and risk management if you truly want to last long in the forex trading industry. Now let me be specific. If you want to become a pro forex trader, you want to become a professional forex trader, there are few things you need to master, right? There are few things you need to master, very important. The number one thing is support and resistance. Support and resistance is the foundation of all technical analysis. There is no forex trader that will tell me that he or she is trading without support and resistance. Support and resistance is the number one thing you should master in the forex market. Support and resistance. After that, the next important thing is candlestick pattern. Master candlestick pattern. This is pure price action. If you master candlestick pattern, you will be able to know the direction of where a price is going. You'll be able to detect reversal move. So candlestick pattern is another thing you need to master very well. And then the next thing again you need to master is chart pattern. The market always drop some signals whenever it is moving, right? So these signals are what formulates the chart pattern, because they are repeated. It is something that you have seen before in the chart, and seeing it again will give you the confidence that this thing happened before and it's going to happen again. Like the double bottom, let's assume that you went to your historical chart and you saw that after the double bottom, what happened? The price change, the trend change, right? Self-discipline is very important. It is one of the criteria that you need to develop as a forex trader. If you have strong self-discipline, if you know how to respect your rules, then you will be able to last long in the forex market. Just don't focus on money. Don't focus on how to make money faster. Focus on how to respect your rules. Because if you know how to respect your rules, you will be making money consistently. And that is how you will be growing your account. But if you don't know how to respect your rules, you'll be violating your rules so many times, and this will make you to be losing your trading account. So that is why it's very important that you discipline yourself so much to the extent you will erase fear from your mind. So like I said, this channel is not just about showing you all the best trading strategies. This channel will also teach you how to build a strong psychology, a strong mindset that will help you to be able to endure the downtime, because there are downtime in the forex market. There are times that you lose, there are times that you win, right? And when you win, you are happy. When you lose, you are sad. Self-discipline will make you to know that it is not all about winning. Sometimes you have to lose. So if you have a very powerful self-discipline, you will focus on your rules, focus on your strategy. Don't allow anything to draw you back. That is the power of self-discipline. That is why you have to master self-discipline, so that you'll be making wiser decisions while trading the forex market. For me, I have mastered so many strategies in the forex market, but I know that strategies alone cannot make me profitable in the forex market, because I may have all the best strategies in the forex market, but if I don't have the self-discipline to respect my rules, I will not be able to last long, right? Because I might make money today, tomorrow I lose everything, right? So even if you are the best trader in the world, if you don't know how to respect your rules, if you don't study, master self-discipline, you will not be able to last long in the forex market, because there is nothing like 100% in the forex market. Sometimes you may have a setup that you feel has 100% probability, but at the end of the day, that trading setup will go into the losing streak. You might lose the trade with that setup. So that is why there is nothing like 100% in the forex market, right? You just try your best, and whatever you say, you take. So that is why I'm encouraging every one of you to learn how to respect your rules. Don't ever violate your rules anymore. Learn to respect your rules so that you will last long in the forex market. Now, if I want to trade the forex market, there are things I need to understand. Now, when the price is above the 200 exponential moving average, I only look for buying setup, right? I only look for what? Buying setup, because I am a trend follower. I always trade in the direction of the trend, right? Now, if you look at the chart now, you clearly see that the market is in an uptrend, because the prices are above the 200 exponential moving average. So now I am not looking to short this market, I'm only looking to buy, right? Because the buying will give me more pips. Like if I decide to short this market, the pips will not be that much, right? But if I decide to buy this market, my plan is to gain more pips. So what I need to do is to exercise patience and wait for my trade to ride massive trend, right? Because I know that once the price is above the 200 EMA, the price is going up, and when the price is below the 200 EMA, the price is going down. So what I will do is I will look at support and resistance level, and for the fact that the price is going up, I will always look at the support level, because that is where I will be placing my trade. If you look clearly, you see that this is a support level, right? So once the price gets to this level, I will take a buy trade. So for me to have the visibility that this is a support level, I will simply draw a horizontal line here to tell me that this is a support level, so that when the price comes back to this level, I will take my buy trade. This is another support level, right? When I see this, I draw my horizontal line here, so that once price comes back to this level, I take my buy trade. I know that this is a support level because the market is clearly going up. Why? Because the prices are above the 200 moving average. Now, this is another example. If you watch clearly, the market structure will tell me that this is a downtrend. And if I really want to ride this trend, I will just wait for the price to cross below the support level, because if you watch, this is clearly a support level. I will wait for the price to cross below the support level, and then I will wait for the price to come back to test the level, because as the price crosses the support level, that support level automatically becomes a resistance level. So when the price comes back again to that resistance level, which is the support level turn resistance level, I will simply place my sell trade. So if I want a 1-to-1 risk reward, I will calculate my stop loss and my take profit. If my stop loss is 30 pips, then my take profit might be 30 pips. That is 1-to-1 risk reward ratio. And if my stop loss is 50 pips, then my take profit will be 50 pips. I don't normally like 1-to-1 risk reward, because if I lose, right, 4 trades and win 4 trades, I am still losing. I prefer at least 1 to 2 risk reward, 1 to 3. That is what I prefer, so that once I win, even if I lose, right, it will take me 3 losses before I can, come back to break even, right? For instance, now, if the price comes back to this resistance level, I will simply place my sell trade and maybe measure 40 pips as my stop loss. Then I will target 80 pips as my take profit. That is 1 to 2 risk reward, right? That means I am risking $1,000 to make $2,000, right? That means if I lose, I have to lose 2 times again for me to break even, right? So that is why you also need to understand the risk reward ratio. These are very important in the forex market. So back to what I was saying, if you truly want to make $1,000 every day trading the forex market, you need to have enough capital. You need to have at least $100,000 in your trading account, or $50,000 in your trading account, and then make use of either 1% or 2% of your entire capital, and then use any of the strategies that I have been teaching you in this channel. Use any strategy that you believe you have mastered and you are good with it. Use it and you'll be making so much money in the forex market. Ladies and gentlemen, I think this is the end of our today's video. I hope you have learned 1 or 2 from this video. If you have done that, give us a thumbs up. Don't forget to subscribe to this channel for more educative content like this, and also don't forget to subscribe to my channel for more videos. I will see you again in my next update. Enjoy the rest of your day. Bye.